Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our mid year and end of month stock market analysis. As you can tell, the bears have been in full effect across all major U.S. indices in the month of May. The old adage, sell in May and go away, has definitely been realized and has certainly come to fruition this month with a significant sell-off across the board. As we can see here, we have a full bearish engulfing pattern from price action in the month of May. We have a 3-year monthly chart here, and just this month we have negated price action from the last 2 months, with the S&P 500 seeing approximately 7% reduction, which equates to about 19.5 points across the board, primarily driven from the back and forth and overall market confusion around the U.S. and China from a tariff perspective. So the U.S. is not only engaged in discussions and dialogue with China, but also with Japan, Germany, and most recently this past week with Mexico. The overall market does not like the uncertainty that we have seen around tariffs, as well as the Federal Reserve, with the back and forths of potential interest rate reductions or interest rate increases. And just most recently, the changes in the United Kingdom around Brexit, as well as some changes in regards to the overall leadership of the market. However, that does not mean that we can't make money, irrespective of the overall bearish engulfing that we have seen. The overall market has been in a very bullish mode over the last several years, and most likely will continue with this small pullback that we've seen. However, it is definitely noticeable and caught a number of bulls off guard with this particular pattern that you see in yellow not coming to fruition. So it's not only what the market is doing, but it's also what is the market not doing that we need to kind of pay attention to. And that's where our preparation, our dialogue, and coming up with multiple hypotheses on what potentially could take place is key to making money. So as you know, you can make money with the market moving upward, as well as the market moving downward, and certainly moving sideways. And that's kind of what we anticipate over the next few weeks and few months, as the summer months kick in and there's not a lot of institutional volume that is traditionally seen over the summer months. However, all of that could be negated with a few handshakes and some ink to paper in regards to our tariffs, which has really caused a lot of back and forth, primarily in our technology sector, and we'll review that momentarily. So today we'll walk through kind of where we are, and I'll conclude what we anticipate as the focus and forecast for upcoming weeks, and I'll leave you with a few trade ideas as we move forward. As stated, the market has been pretty consistently trending in a downward fashion over the last few weeks. However, that does not necessarily mean that that cannot be reversed relatively quickly with a few handshakes and a few strokes of the pen, with a lot of uncertainty moving away pretty quickly. The market typically moves upward roughly about 98% of the time. However, when it does go down, it does go down with a strong amount of force. And that's what we've seen over the last month across the board. Again, what we have in front of you is a 3-year monthly chart where each candlestick represents 1 month of price action. And one of the things when we work with anyone, we try to communicate that the market is simply an auction where individuals come together in the market and try to determine what is a fair price and look to exchange goods and services at that particular fair price. Now, how do you determine what is a fair price? Natural question. So that's all in the software that you use. And one of the tools that we use heavily is TD Ameritrade Thinkorswim. So this is not necessarily a recommendation for them, but it works for us and is considered a very, very significant tool. So in part of that, what we've highlighted here is a caption of what the software has shown us to be what we consider value area high and value area low. In this instance, from on a monthly basis. And you'll see subsequently on a weekly basis where we make a lot of our decisions to move forward for trade execution. So price will move and float within value, and we can look for gaps in the overall auction to make certain decisions on if there will be a reversal or a continuation. So as you see here, over the last month, and as we closed into the April months, you saw that price action was moving very aggressively upward and actually hit almost to the tick at value area high. And that is typically a reversal signal. So we were alerted not only with the sell in May and go away, but then also we are at the top of the range of where the auction considers to be a fair price. So the selling was very much anticipated, and we took full advantage of that. So if we look at our weekly view, it kind of comes into play a little bit more of exactly what has taken place as price stepped out of value and reverted right back down. And we've highlighted a price point of roughly about $275 where it potentially could reverse and move right back upward. Again, the movement over May was large in its own individual context, but if you look at the broader window of time, even over the last year, 2 years, the pullback was definitely not as significant as we have seen in previous months. From a sell-off perspective, we have seen here a huge sell-off that came in toward the end of 2017 that we very quickly returned and moved back forward. So be careful as you look to jump on the bandwagon. The market likes to ruin a lot of accounts if you make too many assumptions. The key is to make adjustments as you see the market moving in a particular direction. It's following, you want to follow where it's going versus you holding fast from a perspective. So the S&P, we anticipate a sharp return back to previous prices. Again, that could take place in this type of a fashion. However, we are keeping ourselves relatively nimble as we are relatively halfway between value area high and value area low, where prices are seen to be relatively fair. Now, moving on to the NASDAQ, which is the QQQs, we've seen very much similar with a 9% reduction and roughly about a 16.5 point pullback over the last month, primarily driven by a lot of pushback from China, where a lot of technological companies here in the States have operations in China. But it does not mean, as stated previously, that cannot return right back to previous highs. So be careful as we continue to look in this fashion. Now, we are positioned to move a little bit sideways, but our 9-month moving average here is looked at as a support on the monthly, which typically our big institutions make changes. Big institutions don't really care if we're up $2, down $3, etc. They're looking at the longer term plays for their decisions, but they typically make decisions roughly around the end of the month. That's why we're doing a monthly analysis. So from a QQQ perspective, we believe that we will kind of go horizontally or push downward to our port of control on a monthly basis, roughly about $169. So we're kind of keeping our powder dry, as some individuals say, on where we could go. But there are some gaps in the auction where price could look to revert. From a short-term perspective, we anticipate a push down to just below 173, and certainly a strong reversal around the $170 amount. The market likes round numbers, and this kind of aligns to where there are gaps in the overall auction. So moving forward on the Russell, ETF IWM, we do see a very similar pattern that we've seen in other indices, with IWM roughly down about 8%, but coming into very solid support, roughly about the $145 mark. And we feel that this could also be a strong level of support for us, kind of coming across here with a little bit of stabilization moving horizontally, or a continued look below and fail to this trend line, and then a reversal back upward. So we are positioned relatively well with some trade ideas where we could take advantage of price movement moving horizontally, as well as a reversal back upward into previous price action. Now, again, all of this could exactly move exactly opposite, but we anticipate this type of movement moving forward, with a potential pullback of all the way back up into this higher resistance type area moving forward. Now, you do have what we call a little bit of a megaphone type pattern where prices can potentially oscillate. Now, that does increase the volatility and the range of price movement. So again, be cautious, let the market kind of unfold and take advantage of the directions that it's moving. Now, in conclusion, we'll look at the Dow, the DIA ETF. Again, the Dow was down to roughly about 7%, almost a full 18.5 points reduction from our monthly close last month. And as you can see, we have seen exactly a movement right to the point of control. And the point of control is the most traded price within a particular range, and typically a reversal point where traders that are moving in one direction, in this example, a bearish movement, they can exit their trades to look for some type of reversal, or what we anticipate most likely a trading range where we will see price movement move back in this direction over the next month. If we look at our weekly chart, it's a little bit clearer on that potential. Typically, what we see from a value area high and value area low perspective, if price is so close, we typically look at this as a very strong reversal perspective. But we do see roughly about a good 2 to 3 points before we actually enter into value area low. So from a Dow perspective, we see a little bit more downward movement over the next few weeks. But again, this could rapidly change. But we do anticipate a touch of this area, roughly about 245, with a potential reversal. So keep your powder dry. Take a look at what's going on and position yourself very well. If there are questions, we are always here to serve. This is our full-time role. This is our passion. And this is where all individuals can look to supplement their income to help create generational wealth, which is one of our true passions. And the goal is, it's your money and it's under your control. So we'll leave you in this session with a few trade ideas. First, we're looking at Facebook. In front of you, you have a 3-year monthly chart. Obviously, you can see some oscillation of Facebook over the last few years, and certainly along with the rest of the market over the last month, you've seen a lot of bullish reversals. We've seen almost a 20-point reduction in price of Facebook over the last month, which is pretty significant. We've highlighted some trend lines here where we feel this wedge, we should see some continued reversal. So we are anticipating a pullback back to its 20-month moving average, which is roughly about $164. So if we look at the weekly chart, it's a little clearer on kind of why we want to do that. As we see a pullback roughly to about 166, continue to see a lot of convergence around this price area here, kind of highlighted in this box. A back and forth where the bulls and the bears were seen in equilibrium. We feel that this area will be retouched to allow the bears to exit their position, typically around the point of control, as stated earlier in the video. Depending on which direction the market is moving, those participants will look at the point of control as a target to exit their position. So we feel that this area, this zone, is going to be key. So we're looking at a potential reversal as we get down to this area. What we're looking for is a touch of this, and then something that's certainly like that. Now, if that does not come to fruition, what we anticipate is the movement continuing all the way down to the bottom of the wedge and then moving right back up toward this as a target. So we're looking at a long, roughly about $164 for Facebook. The second trade idea, and again, these are just ideas, these are things that I'm doing, not necessarily recommendations for you. We're looking at gold, the gold ETF, GLD. If we go back to the monthly, we did a trade on gold earlier in the month, which worked out very, very well for us. We had a long position that took advantage of this, we call it double bottom or tweezer bottom, and we made a good amount of funds in that regard. However, we did not anticipate that the other macroeconomic changes across the globe would impact gold. We've seen just on Friday about 1.5%, just short of 1.5% movement of gold moving forward. So we anticipate that movement continuing roughly up to the 125 level. If it breaks through that, we anticipate a touch towards value area high, roughly about 128. We call out this 125 level one, it's a relatively round number, and then secondarily, we have a convergence of a high volume node where there was a lot of transactions that were taking place in the auction. And then lastly, if we move to the weekly, it coincides exactly with value area high on the weekly. So we anticipate a movement up to this level with a potential reversal because it would create a double top going back several weeks. So this is a few trade ideas. So gold long as well as Facebook long. So we're looking at gold long above 123.77, and we're looking for continued pullback for Facebook down to the 164 level. Now it may take a few weeks for us to get Facebook down to that level. However, that's a strong reward to risk ratio at those levels. So with that, we thank you for your time and have a good rest of your trading day. Again, it's your money and it should be under your control.